experience of the effects that the lack of long-term care planning can have. Needless to say, he's passionate about the subject. Zach is a graduate of the Ohio State University, where he earned his Bachelor of Science in Business Administration. I won't make you wait any longer. Zach, please take it away.
Thank you so much, Mike, and thank you everybody for joining us today. I hope that some of my passion as it pertains to long-term care, you're going to see that through today's presentation. And you see me now on the screen. I may be a little younger than you would say for a subject matter expert for elder care planning, for long-term care. But as Mike said, I've seen the effect that long-term care and elder care planning can and will have on many families without a plan. I watched my mother, who wanted nothing more than to provide the best care she could for her mother when her mom, my grandmother, needed care. She gave up everything. She quit her job and she became a full-time caregiver. And 20 years ago, nationwide, knew that for many families, providing care to a loved one isn't a choice. It's a necessity, and it becomes a challenge on that caregiver. And we wanted to address that. And we launched our first long-term care solution available to consumers. And it worked different than what was in the marketplace. And it's one of many options that you have available through the agents that have invited you to today's call. But we'll get to that later. I want to start by introducing what is long-term care. How does long-term care work? How would you qualify for it? And why is it so important? And we're going to go through all of that today. We're going to have questions at the end. So if you have any questions, please take notes, write those down. I think enter those into the chat feature. And we would love to hear what you want to know about. Thank you for taking your time to join us today. I will say that those who have a plan for long-term care are going to be better positioned. They're going to have more choices, and their family is going to be better protected than those without. And what we find is those that prepare for long-term care, not only for them individually, but for you, for your family. It's one of the best gifts you can ever give your family is a plan for long-term care. Doesn't matter how you decide to, there's a lot of different ways that you could fund a plan and prepare for it, but communicating that to your children. One thing I desperately wish would have happened was that somebody reached out to my grandparents, told them how important long-term care is, that they would have had a plan and communicated that to my mother. What a gift that would have been. My mom provided that care. She wanted to do it. Man, could she have used some direction and some help. So let's go ahead and get started. And as you might assume with a presentation and a seminar like this, we're going to start off by defining what is long-term care, or as Mike said, elder care. When you think about long-term care, everybody who's on the call, what comes to mind? What might you think about? What's the first picture you think about in your mind? And for a lot of people, we find that when you think about long-term care, we often think of nursing homes. And although that is one type of place that someone might receive care, it does not define long-term care. Long-term care is not a place. You know, we think about a nursing home as somewhere you might receive care, assisted living. A lot of people receive care in their own homes when they have a plan. But those are all places, but really long-term care is an event. Just like college, planning, vacation, any event in your life that you would plan for. You'd plan financially for it, and you'd also have a plan for how you'd want that to go. And I think of long-term care the same way. I'll show you kind of the formal definition. Variety of supports and services designed to help people live as safely but as independently, and I think that's an important word, as independently as possible when they can no longer do so on their own. When I think of long-term care planning and long-term care in general, if I'm older and I need help from somebody else, I still want to be as independent as possible, but I also want to reduce the impact that that has on my family, on my loved ones. So I want to be as independent as possible, but reduce the impact on my family. I said that nursing homes, that's one place somebody might receive long-term care during that event, but it's not where most people receive care. And I think that's a really good thing. Most of you on this call and people that I talk to, my family, my friends would say, I don't ever want to receive care in a nursing home. When somebody has a plan for long-term care, we find that over 50% receive care in their own home. When my grandmother first got sick, my mother decided to move in with her. But my aunts, they had a completely different plan. My aunts, they were the ones with the money. So they got to make a lot of the decisions. And they said, we think that grandma should go to an assisted living facility, which is somewhere where you still have some independence, but you have to move and you're going to live permanently in this community where they're there to kind of help you and you progress from there maybe into a nursing home. My grandmother did not want to go. She lived in the same small town her entire life. I'm from Columbus, Ohio. She was from Pittsburgh, Pennsylvania, about 3 hours away. Very small town, and she did not want to leave her home. My aunt said, we'll pay for all of it. My mom said, no, I'm going to quit my job. I will move in with her. I will take care of her. And my mom did that for a few years, but it became very difficult because she lost all of her income and her benefits, and just being a caregiver in general is a very difficult task, especially if there's not a plan. Eventually, my grandmother did end up in that assisted living facility, and I went to see her with my wife. At the time, my wife and I, we were dating, and we went to see my grandmother, and I said, Grandma, how's it going? She said, Zach, I have a plan. I'm getting out of here. I said, what are you talking about? You're getting out of here. Where are you going to go? Where do you think she said? She wanted to go home. My wife, I met her in a restaurant. We worked together when I was 16. Her great-grandmother lived with her, and my wife was providing care to her when she was only 16. Her mom, and her great-grandmother lived together at that time. And one night, they woke up in the middle of the night, and her grandmother, she's standing there with her bags packed, and she's kind of disoriented. She had dementia. And my wife and her mom came out and said, what's going on? What are you doing? And she looked at him and said, I just want to go home. We know that this is important, not just today, but in the future, that if somebody needs care for long-term care, we want that person to have the opportunity to age in place, if at all possible. Aging in place means staying where you're most comfortable, around the people that are familiar. And what's encouraging about what we see on the screen is that a lot of people with a plan may not ever need to go to a nursing home. Or if they do end up going, it's for a shorter period than somebody who doesn't have a plan in place. Our goal with our long-term care solutions is to help people stay in their home as long as possible. Now, another definition of long-term care, we have to look at what it is not. And it is not disability insurance. There is a difference between the two. So if you think about disability insurance, I have disability insurance for my job. A lot of people do. Think about a surgeon. And a surgeon who has disability insurance, maybe something happens to their finger. They lose a finger. Well, they could no longer perform surgery. And the disability insurance, depending on the type, might pay to replace that surgeon's income. So if something happened, an accident, and you could no longer do your own job, some disability insurance is set up to pay a percentage of income. Long-term care is different. Long-term care coverage, like insurance policies, the way that it pays out the benefit, your doctor, not the carrier, not the insurance company, but your doctor would certify that you either have Alzheimer's or dementia. That's one way. or if you can't do 2 of 6 activities of daily living. Well, what are activities of daily living? Bathing, eating, dressing, toileting, transferring. So it's the kind of things that someone does when they wake up in the morning until the time they're kind of eating breakfast, right? You're going to transfer out of bed, you're going to shower, you're going to change, you're going to prepare breakfast, you're going to eat. If you need help from somebody else, either hands-on or somebody there in case you need help, and it's expected to last 90 days, doesn't have to be a permanent condition, but it's expected to last 90 days, that certifies you, and that's what begins your payout for a long-term care contract. So different than disability insurance, it really comes down to, can you not do 2 of those activities without somebody else's help? There is a 70% chance that anybody over the age of 65 in the US will need long-term care for some period of time. That's a large number, right? 7 out of 10 people. Some will need it for a short period. With Alzheimer's and dementia, some of us will need it for a much longer period of time. And that makes it very unpredictable. And that's where having a plan in place in case you have a longer than average claim is important, to protect yourself financially and then also protect your family who may or may not be a caregiver. So I talked about my mom and my wife and her mom being caregivers. Certainly men are caregivers on occasion, but overwhelmingly it's really a pandemic in some ways when it comes to women in long-term care. 3 out of 4 caregivers are females. What we see a lot of times is it's typically the oldest female in the family, the daughter who is maybe choosing to quit her job or feels like she has to quit her job to take care of mom and or dad for a period of time while they need care. And for women, it's not free, right? If somebody's providing that care, like my mother who quit her job for years, she lost more than just income. She also lost her health insurance for a period of time. She wasn't contributing to her 401k. Her Social Security income might be lower because there's years where she was not working. When we look at the average caregiver, we see that about 300,000 of lost wages and opportunity cost per caregiver is lost when somebody provides care. Women also live 5 years longer than men. Long-term care coverage protects a spouse, their health, their family finances. When we think about long-term care and we think about financially what that means, a lot of times we talk about assets. Do I have enough money that if I needed to pay for care, will I have enough money stored up in my retirement to pay for it? But it's important that we also think about the income that those assets produce. So if I spin down a portion of my portfolio, that money is no longer there to produce income. And that income is what's used to pay for bills and expenses and lifestyle. So my father-in-law, Dave, he is 60. I think he's 61 this year. And his parents were in a nursing home for 5 years each. And they went through all of their life savings. And when they passed away, they had no money left. And once you run out of money, there is a program, it's a government program called Medicaid. Now, Medicaid is almost primarily for nursing home costs. You have to be impoverished. You have to have less than $2,000 in most states to qualify. But again, his parents, they saved money their whole lives, and then they lost it all to long-term care. They didn't have a plan, and then Medicaid paid for it. So I asked Dave, I said, Dave, what is your plan for long-term care? Do you have one? He said, yes. And I said, that's great. What are you doing? And he said, I'm going to retire early. I'm going to golf and vacation, and I'm going to have fun with the money I saved. And I'm going to make sure that when I need long-term care, when I'm 80, that I don't have any money left, so the government will just pay for it. not the best plan, and I'll walk you through why. One, I said Medicaid is typically nursing homes. Over 70% of people would say they don't want to be in a nursing home. So Dave has limited his options. The other reason, something Dave just didn't think of, when he depletes all of the assets to qualify for Medicaid, Christy, my mother-in-law, is 10 years younger than him. And what's that first kind of statistic that we shared on here? Women live an average of 5 years longer than men. What we see happen a lot of times is the husband might need care for a period of time, uses up a lot of the assets and income, passes away, and then the wife is the one who needs long-term care for a longer period and has no resources left. Now, there's other ways for Dave to plan so that he can still enjoy retirement, he could still retire early, save his money, and have quality long-term care without having to try to spend down all of his money to qualify for a government program. We'll talk about some of that. Here, let's look at the out-of-pocket long-term care expenses for someone without a plan. This is the average cost across the US. And we look at home health care, about $43,000 annually. Adult daycare, about $17,000. Assisted living, where you're permanently living in an environment where you're able to get some assistance. It's not quite as intensive as a nursing home, but that's about $43,000 as well. And then for a nursing home, these numbers are kind of crazy to me. Nursing homes, $80,000 per year, $91,000 if you want a private room that you don't have to share with somebody else. So on that average claim, if somebody needed care just for 4 years, and we see claims that go much longer than that, but for a 4-year long-term care event, that could total close to $365,000. And that's in today's dollars. So if we look at 4% inflation from now until the year 2030, we're going to see that those numbers go up significantly. In 20 years at 3%, these costs will double. A nursing home might be $15,000 to $20,000 per month. Not something that I want to pay out of pocket for. So there's a couple ways that we can address the risk, the cost associated with long-term care. One way is to ignore it altogether. And by ignoring it and just not looking at the numbers, not planning, similar to what I've experienced in my family, that puts a lot of the financial, emotional, and physical risk on the children, the adult children in the family. The other way is to manage the risk, to decide that I'm going to manage this risk, I'm going to save for this, I'm going to set aside money, and I'm going to try to self-insure. The third way to look at the risk of LTC and the cost would be to transfer that risk. So think about your auto insurance, the same kind of idea that if my car was totaled, or if I have homeowner's insurance and my house unfortunately burnt down, I don't want to pay out of pocket even if I could afford it. I want someone else to replace that cost, and I want to pay pennies on the dollar to do it. And that's where we can look, if somebody is insurable for long-term care, we could transfer some or all of that risk to an insurance carrier. Knowing some of your options, there's other, I'm not even going to call them solutions, there's other common misconceptions about different types of government programs and things that exist. With health insurance, it does not cover long-term care. The Affordable Care Act back in 2013, there was something called the Class Act, and the Class Act would have been some amount of universal long-term care for everybody, and there wasn't enough funding for it. President Obama repealed that on January 1st, 2013. Health insurance does not cover long-term care. Medicare is a program, in addition to being kind of health insurance premium and things like that when you're 65, if a client or if somebody, a consumer, anybody who needs care, the most it's going to pay is 100 days. And oftentimes people think, well, this covers long-term care for 100 days. It might, but there's some very specific regulations on it. The first one, for Medicare to pay at all, you would have to be in a hospital for 3 days under treatment, not observation, but under treatment. If you have 3 consecutive days in the hospital, Medicare may pay for up to 100 days of rehab. If it's a permanent condition where you're not showing signs of recovery, it's not going to pay at all. But if you are, maybe somebody's had a stroke and Medicare comes in. My grandfather, he fell and went to the hospital for a while, and Medicare paid for a little bit of time for him to rehab at home. But for a long-term care condition, with the ADLs that I talked about, the activities of daily living, Medicare will not pay. Even if it does, the most is 100 days. And there's some cost too to that. There's a copay starting on day 20. Medicaid, I talked a little bit about Medicaid. That one is long-term care related. It's a government program for those who need it, for those that are impoverished with less than $2,000 of assets in most states. I'm glad that it exists. It helps a lot of people out that are facing, really they're already at the point of bankruptcy and they really have no last resort. They're out of money, but they need help. Just keep in mind that it's typically limited to nursing homes, and it's not for somebody with assets that they want to protect to pass on to their children or to have money left over when they die. So Medicaid is very limited. It's mostly nursing homes, and you have to be impoverished. Now, self-insuring, unfortunately, a lot of people are self-insuring by default because they've never planned for LTC. But it's never too late to put a plan in place. If you're still insurable, there's great solutions, which I'm going to talk very briefly about. If you're not insurable, still meet with the person that invited you today. There's other ways to save and to efficiently leverage or work with assets within your portfolio to address the risk of long-term care. For those that are insurable, that have health, that an insurance company, right, Nationwide, for example, we're a for-profit company. We unfortunately can't give everybody insurance. There does have to be a level of, when I say insurability, a certain amount of health that exists for us to offer insurance to a client. It is underwritten in that way. The 3 solutions available, and I'm going to start at the bottom and then work up towards the top. Standalone policies. Most of you, if you aren't actively in this or haven't met with an advisor before about long-term care, when you think about long-term care insurance, you're probably thinking about standalone policies. They've been around the longest. They are the least expensive, but the premiums can go up. All right, so it's not a guaranteed premium. It's purely for LTC. The trade-off of that, even though it's the least expensive, if you don't use it, you do lose it. In other words, if you don't use the long-term care, you don't get anything back. So if you think about auto insurance, I pay my premium, and I don't even want to add it up, right? $100, $120 a month, I don't know, and I've paid it for 20-something years, and it's probably $20,000 in premium that I've paid for my auto insurance. I've never been in a wreck. I've never been in a fender bender. I'm a good driver. Well, when I die, if I pass away unexpectedly, the insurance company doesn't give me anything back just because I never filed a claim. It's not how auto insurance works. But what if there was auto insurance where the premiums would never go up? If you never got in a wreck, you passed away, your spouse got all the premiums back. Let's take it a step further. What if there was auto insurance where if you just canceled the policy, you could walk away and get your money back? You say, I don't want this anymore, and they write you a check. There is not that type of insurance for auto insurance. Unfortunately, I would buy it. But that's exactly how this next one works, which is called linked benefit policies. These are the newest solutions in the marketplace for long-term care if you want to transfer that risk. It's primarily for long-term care, but if you don't use it, there's a death benefit. meaning that all of your premiums will be paid back to your family income tax free if you don't use the policy. There's also a potential for a refund of premium. Our product, after 5 or 10 years, depending on how you set it up, you can cancel and get all of your money back. Oftentimes, a client that might have money sitting in cash or at the bank in CDs earning very little interest, we might be able to reposition that money, still keep it liquid, but leverage it for long-term care. And whether you use it, you don't, or you quit the policy, you win. You get your money back. The insurance company doesn't. So that's the newest. Another one at the top, this is for somebody who primarily is looking for life insurance. That's their number one goal, is life insurance for protection or for wealth transfer. We want to pass money on to the next generation, income tax free. And you can add an LTC rider. And what that rider does is it allows you to access your death benefit while you're still alive. It's still income tax free, and you can use it for long-term care if you qualify. The way that you qualify, we talked about that earlier. You either have a severe cognitive impairment like Alzheimer's or dementia, or you can't perform 2 of 6 of those activities of daily living that we discussed. Your doctor certifies that, they write you a plan of care, and the insurance company sends you your death benefit, usually in installments over a period of time that you can use for long-term care expenses. So 3 different ways to do it. Again, whoever invited you to the call, they're the experts in that. They know about those solutions, and they can talk about what is the best fit for you, how to address this risk, and if transferring that risk makes sense, what type of solutions might fit best for you, depending on your financial circumstances, your goals, and what you're looking for. Some things to think about as you plan for long-term care. Things that I'm thinking about, and my wife and I, now my son's only 4, he turns 4 tomorrow, he's excited. My daughter, she's 3, and I'm crazy, I have a 1-year-old too. So we have 3 kids under 4 right now. I'm not discussing my future long-term care plan with them quite yet, but I am putting it in writing. Where would I want to receive care? Who would I want to have provide that care? What options would I want? It's also kind of a nice letter that you can write to your children to say, hey, look, I know that when I get older, I might not want to, I won't want to give up my independence, but I trust you and I love you and I appreciate what you are going to do for me in the future, and you're doing the right thing. We had a client write that type of letter to their children, and when the children filed the claim, they found that letter with the policy, and they said it gave them so much reassurance, because it's very difficult when trying to figure out how to provide care to a parent and what type of care. And there really is no perfect plan, but having that letter was pretty neat, something to think about. Nationwide, we entered this market in 1999. I'm going to give you one more statistic. I don't always share a ton of statistics, but I think this one is what motivated Nationwide to take action. For older disabled Americans, so someone in retirement who needs help, needs long-term care, elder care services, only 9% of the time does that person receive all of their care from a licensed caregiver, like a nurse or a home health care agency. In other words, over 90% of the time, family is providing some of that care, or if it's not family, it might be somebody from the community, somebody from your church. My best friend, his wife, Katie, in our church, there's an older woman who developed Alzheimer's. And for them to bring a nurse, you know, there's 170 hours in a week. There's just no way that we're going to pay $30 an hour for a nurse 170 hours in a week. It would be unreasonable. You know, that wouldn't be possible. We might have to have that person go to a nursing home in order to receive that type of care. But this family didn't want that to happen. So family's providing some of the care. There's a nurse that comes a few days a week providing some of the care through a home health care agency. And Katie, my best friend's wife, she goes over there at nighttime and she stays there to provide safety in case something were to happen. The reason they'd have Katie do that is she costs far less per hour than a licensed nurse. Well, most long-term care won't pay for that. Long-term care contracts 20 years ago only paid for licensed care and qualified expenses, and you had to be reimbursed for those. So there's two different types of coverage. They're both good, but what we do at Nationwide is what's called indemnity. These are cash benefits. So instead of looking every month and saying, what were your expenses, what's qualified, what's not, and then having to submit those and get reimbursed, like on the right-hand side, Nationwide 20 years ago said, let's just pay out cash. Why have a list of things that are and are not covered? And by providing cash to our clients, our members, we're able to create a solution that's more flexible, where you're going to have more choices, you're going to have more options. We allow for 100% informal care. Informal care meaning family members, community members, somebody from your church, whoever you want to provide that care. We can cover that because we pay out cash and we don't ask for proof. Another way that our benefit gets used sometimes, home modifications. So thinking about aging in place, if I'm in my home and I want to stay there, but now I need assistance getting around, is my house safe enough? Maybe I need to put in a stair lift or a wheelchair ramp or some of that type of equipment to get around. But what we found in my family, when my mother moved in with my grandmother and took care of her, the bedrooms were upstairs, like a lot of houses. Well, she wanted to receive care, but she did not want to use a stair lift. So we took the dining room on the first floor, turned it into a bedroom. I don't know if that's covered on a reimbursement style plan, but with Nationwide, we pay cash, it's going to cover that expense. So it covers all of the normal qualified long-term care, but it also, because it's cash, can pay for anything else that the client wants or needs to use that money for. We talked a little bit about long-term care riders on life insurance, where your primary goal might be purchasing life insurance. And for very little, in my opinion, additional cost, you can get access and you can accelerate your death benefit to help pay for your LTC. It'll be a monthly check written in cash to you, the owner of the policy, and you can use it for really any services that you need. Any money that you don't use, if you don't use the long-term care, you still have all of that death benefit. So that's just one of the many solutions that you could meet with the person that invited you, and they could help you better understand how that works, what it looks like, and the value in an LTC rider on life insurance. The other one, what we call CareMatters at Nationwide. These are the newer solutions. I said they're linked benefit. It's like auto insurance where you can't lose. You get your money back no matter what happens. Nationwide's called CareMatters. This is a good fit if you're looking primarily for long-term care insurance. You want to purchase the least expensive long-term care plan, get the most long-term care, but also have a death benefit so that if you don't use it, you get your money back. We guarantee the premiums. They're never going to increase. You could choose a return of premium so that you could cancel and get your money back if you wanted. And that last bullet point, why Nationwide does what they do, why I'm so passionate about what I'm talking about. When I came to Nationwide, my background was not financial services. I worked for a shipping company when I first got out of college. And then I had a referral and somebody said, you got to check out Nationwide, which is headquartered in my hometown, Columbus, Ohio. They said it's a great culture. They do great things for their people. And they weren't wrong. I came and I started learning about life insurance and LTC. And at that time, that's when my mom was providing that care to her mom. And I learned about the way that Nationwide and some of these other insurance carriers are starting to provide LTC. And they're getting innovative. They're thinking about it in a different way. Nationwide placing no restriction on how the benefits are used. But intentionally allowing for family care. My mom would tell you those were the hardest years of her life as a caregiver, but she would also tell you they were the most important and happiest years of her life. She wanted to be there providing care to her mom. They shared stories, they laughed. She wanted to be there with the limited time she had, but she lost income and it affected her financially, emotionally, and physically. We didn't have a plan like Nationwide's CareMatters or the LTC rider that pays cash. And I really wish we did. So I want to go out and talk to as many people as I can, see if it's a good solution for you. We have a free long-term care assessment that we provide to any client. So as a follow-up to today's conversation, and I'm going to show this briefly on the screen as we wrap up, there's a kind of a sheet that you can fill out, and I'll show it to you in just a moment. So Nationwide, we're a Fortune 100 company. We've been around for over 90 years. We started as a farm bureau, meaning we helped bring small farmers in Ohio together to share resources and to ensure their property and their business. And we've been in the long-term care space for over 20 years. We're a mutual company. Mutual means we don't have shareholders. We don't have stocks. You won't find us on the New York Stock Exchange. Our profits we put back into our products and back into our members. Our owners are not stockholders. They're the clients who purchase our products. You could be the member with Nationwide. And you've probably seen our commercials and our jingle and things like that. I love working for Nationwide. You can see our ratings there at the bottom. Again, we could get you more information on that. So next steps, I'm going to pull this up on the screen for just a moment. This is that sample report I told you about. It's personalized for you and your spouse. You fill out a short fact finder, some information. This is just a sample for Jim Smith and Linda Smith, but it's going to show you out-of-pocket healthcare expenses. Medicare doesn't pay for everything in retirement. There are out-of-pocket healthcare expenses, and it breaks that down. And it also provides some long-term care numbers and expectancy and starts to generate that plan for you and putting pen to paper. So I would highly encourage everyone on the call. You're going to receive this in an email, I think today or maybe tomorrow. It's our Healthcare LTC Fact Finder. Fill it out. It's anonymous to Nationwide, right? You're going to meet with your agent, the person that invited you. They can work with you. We don't use this information. We don't share this information. We just provide that free report to you and to your agent. So check that out, fill that out, get that back to us, and we'd be happy to work with you and get you to reach out to the person that invited you. With that, I think we'll turn it back over and open it up to any questions that anybody has over anything that was covered today. So thank you. Eduardo.
Very good, Zach. Thank you very much for all this information. And we certainly appreciate all our attendance. And we'd like to, just like you said, open the facility or the communication in case you would have any questions. I think the communication has been thoroughly explained, and hopefully it's clear, and I'm sure it's clear to everybody. But I know there are some questions. You know, I personally going through some of these with my mother, and unfortunately she was not able to qualify for one of these products on time, and so we have to end up without this wonderful product. But if you have any questions, you can either post it on the group chat that we have, or you can just basically unmute yourself. We're allowing you to unmute, and you can post the question right here, and you can get an answer right away. So if you want like that.
Hi, my name is Emilia. Zach, thank you for your great training. Can you hear me?
I can.
Yeah.
Hi, Amelia.
Hi. My question is, actually, I want to be clear. To be able to start on the LTC benefits for these policies, does Nationwide require the managed care proof of services in order to start to allocate that credit, the 90 days waiting period? Can you please elaborate a little more on that?
Absolutely. Thank you, Amelia, for the question. So when a client needs care and they own a Nationwide LTC contract, the family reaches out, and what we need to receive, there's two main forms. The first one is the doctor certifying that the client has that impairment or can't do 2 of 6 ADLs for 90 days. So it's the assessment that you need long-term care services. The second part is called a plan of care. A plan of care is a customized plan for that individual. It might be written by the doctor. More often, it's written by a home health care agency or an assisted living or nursing home facility. They write them all the time. That plan of care is going to say who's providing the care, how often are they providing the care, how are they assisting that person specific to those activities of daily living. Now, Nationwide has taken it a step further, that if the client's able to provide that plan of care, and it can say 100% informal care. Now, I think for most people, like my situation where my mother was providing the care, a nurse was showing up 3 days a week, providing some of the services, and it was supplementary towards the end. So you might have a home health care agency write that plan, who's managing and providing the care at a minimum, but then anything else, because once you qualify, here's cash. And we don't know how you're spending it. We're not asking for proof on a monthly basis. The only proof up front is the plan of care.
So the 90 days is the key point, the importance to get there to survive those 90 days.
Right. So if once we get that plan of care submitted, we then start the clock, and it's 90 calendar days at Nationwide. We don't care how many days a nurse was there. We just count 90 days. On day 91, you've now met the qualification, and we start paying out that benefit in cash. There's one product we have, our newest product, called CareMatters 2. That product, we pay you back for the 3 months. So if you get through the 90 days, we go back and pay you for the elimination period. Our other products, it doesn't do that quite. Different options. But
Thank you.
thank you.
Very good. Does somebody else have another question? We have a...
Yeah, Zach, I'd like for you to address for just a bit the way that long-term care would play into a hospice situation. So you had someone that was went on claim with dementia, and while they were on claim, they were admitted to hospice. Now, Medicare will cover some of the cost of hospice, but not all of the cost. So can you touch a little bit on the benefit of how, what benefit it would be to have long-term care in that kind of situation?
Yes, thank you. And I think about a lot of that being covered. I know, so I haven't even shared this, but I was talking about my mother today, but my stepmother, also a caregiver 3 years ago to her mom, who was an insurance agent, and she bought her own policy, and that policy did pay for a lot of her long-term care. We were very happy she had it. But once she went to hospice, hospice covered some, not all of it. So her policy was able to make up some of that gap. With cash benefits, though, what I'm talking about with Nationwide, when you have Medicare, like with hospice, and you're getting that paid for by a program, with a long-term care contract, you can't double dip. In other words, if hospice is paying for it through Medicare, you can't also have the insurance company pay for that same cost. But with this type of plan, because it pays cash, we're not reimbursing you for that cost. So you can get paid and have hospice, some or all of it covered, and still receive that cash payout in full from Nationwide to cover whatever other expenses you might have. I don't know if that's quite where you were going with that, Mike, or if that covered everything, or if there's anything you wanted to add, but.
Well, what I was trying to draw out is a situation where if someone goes into hospice, Medicare pays for the nurse visit, they pay for the drugs, but they don't pay for the facilities or the meals. And that cost can be very high. In my own case, it was $5,500 a month.
Wow.
So what I was asking there was, or trying to emphasize, was the fact that with an indemnity plan where you're being reimbursed cash, that can go towards that 5,500 or whatever it is that pays for the facilities, the food that's not covered by Medicare.
Absolutely.
Great point, Mike and Zach. Thank you for asking that and for that comment. Does anybody have one last question? If not, I would like to encourage you. You're going to receive one of our emails if we had your email to send you this. If not, you can join back into the Facebook or the message that you receive and click on the link, and you will be able to get these documents that Zach just mentioned. They're amazing guides in terms of helping you to plan and helping you to be aware of these aspects that seem very complex. And believe me, complexity to design it is nothing compared to the complexity to handle an event of long-term care. So I really encourage you to get these forms. They will help you clarify. Of course, you can talk to one of us, and we'll be glad to guide you and to point you in some direction. We're not necessarily selling you anything. We want you to help you. We are part of the financial literacy campaign that you see this on my pin here, and we want you to be informed. We have other workshops that touch a little bit about this, and you're welcome to also join some of our workshops and talk to any of us. I certainly appreciate very much, Zach, for your time, for being away from your wife and your lovely kids. Mike, appreciate tremendously your time and your effort to put this together, and all of the ones who work. And of course, we appreciate you being here, the ones that attended this, and we want you to share the news. There is hope for people to go through these situations in the best possible way. We can travel to a place, go to the grocery store by car, walking, bicycle in the heat, but you can go in a comfortable car with air conditioning. And that's how long-term care can help you go through these situations. And so I certainly want you to encourage you to share the news. Many people don't know. The statistics say that most people are not aware that they can have something to help them. In my example, to have the air conditioning car to take them to the grocery store. They're still walking and they think there's no way to go there. So thank you very much. Have a great Tuesday evening, and please follow us and get to some of the other events that we have that will certainly help you to protect your wealth, to protect your health, especially during these times. Appreciate you. Appreciate every one of you. Thank you.